Good morning, everybody. I'm Robert Joslin, managing partner with Avasant, and I've got our banking and financial services and insurance vertical. And today we're going to be talking about the banking of the future and AI's impact on it. So I'll let the panel introduce themselves. So Mike, if you want to start.
Hi, good afternoon, everybody. I'm Mike Nunez. I'm the Vice President of Commercial Banking. I work with our financial services segment and across all of our California bank footprint as part of the affiliate for Zions Bank.
Good morning, everyone. My name is Ajay Bhandari. I head the US banking vertical at Infosys. In my role, I work with a lot of the large US banks, the mid-sized banks, the regional banks. So see a very big spectrum of banks that we work with, and we help them, modernize themselves, transform, and get them future ready. So excited to share our perspective here.
Hi, everyone. Good morning. This is Girish Gajwani. I'm Vice President Technology at Barclays Capital. I mainly lead transformation programs for Barclays in the lending area, in securitized product space. I've been doing this for the last 20 years now across different fintechs with Lehman Brothers, JP Morgan, and for the last 7 years, it's been Barclays. Looking forward to this.
Good morning, everyone. Ramin, Mobasseri, Wells Fargo. I am the head of AI Agentic data and product transformation at Wells Fargo, and really just been there for the last 8 years. I started the AI enterprise solutions with the bank, and here we are in the age of Agentic.
Well, thank you. And I think real quick today, what we'll talk about is we're going to talk about the impact of AI and the impact of AI on banking and the future of banking. One of the things with all of a combination of geopolitical situations, combination of rapid advance of technology, and all the other challenges the industries are seeing, AI's got the opportunity to make a significant impact, positive impacts and potentially negative impacts too as well if done wrong. So I think what we'll look at up front with what we're seeing and the combination of kind of real-time decision making. Now, on decision making, it's got to kind of start off with recommendations, and then as it moves forward to decision making. So through that entire process. So I'd like to get some input from the panel. Ramin, maybe if you could lead with your thoughts on that.
Yeah, sure. I think today we talked about mission impossible. I want to start with decision impossible. Really want to move from decision impossible to decision possible. And what we use is a framework, and I will be referring to it as DIF, which is a decision intelligence framework, and how you actually build your agentic capabilities using this framework. So one thing we need to think about is like not all decisions, particularly like for financial organizations or highly regulated organizations, they're not all the same when it comes to explainability and governance. So using DIF, you need to come up with a matrix in terms of how we're going to make real-time decisions in different areas. So think of it as a two-dimensional matrix where you have the high or low level of explainability within that matrix, and then you have the real-time decision within that. So think about it when it comes to fraud detection, right? So the speed by which you need to detect the fraud is ultra high, right? So you have to make really fast decisions. But from an explainability perspective, I would say that's a medium. So we do this scoring from ultra high to low. And then when it comes to the explainability, when it comes to fraud detection, so that's going to be something, post-detection. So you don't have to explain before, it's really afterwards. But, traverse that when it comes to credit decisioning. So when it comes to that, of course, the level of the speed is kind of high. You need to make the decision really fast, but it's not ultra high. But when it comes to the explainability and the regulatory aspect of it is extremely high. So you have to be very cautious, very careful. That's why with using DIF, you need to think about outcome back, compliance first, governance first, build your control tower first, make sure your governance is out of the way, that paves the way for your innovation. Now, let's come up with probably the last use case in this instance would be the customer service agents. So the speed is not ultra high, it's probably about medium. And then you have the explainability as well as to how you came up with the explanation that you came up to your customer with, whether it's next best product, next best action, and so forth. Well, is that highly critical from an explainability perspective? Probably not. And this is where, I know we talked about keeping the human in the loop, that this is where you actually engage the humans in that decisioning. So overall, you want to observe, recommend, act, and coordinate. So with those four within the decision intelligence framework, you can decide the speed by which you make the decisions, and then how you actually act upon that with respect to the level of governance you need to apply for those specific use cases. So I do have a full picture of this. There's not enough time to show you this. If you have any questions, you can come to me and I can explain it afterwards.
Ajay, any thoughts around this too as well with what you're seeing?
Sure. So I'll just add to what Ramin just said. I think you have to break down or separate the decisioning part and the explainability part, like you said, and it could be different in different areas. Again, real-time decisioning is not, it actually is a must thing right now because the way industry is evolving, examples of fraud that Ramin talked about, it's happening real time. Payment is happening real time. The decision has to be made real time. And that's where you have to put the guardrails up front. So the human in the loop is not just to take a decision, but also to decide the governance part of it, to put the rails, the guardrails, be compliant with the model risk management SR 11.7 that the industry has to comply to upfront, so that is in your design. So it's by design, not afterwards. And second thing is, then you have to execute it and then keep the explanation model outside of your decision making. But it has to be continuous evolving model. It cannot be done, you cannot be explaining it in a very, I would say, batch kind of a model. You have to do it real time as well. And I think there could be decisions like fraud is a very classic example where we have seen Visa has gone public saying that they saved $40 billion just because they were able to detect some of these real time by scoring and using 100 parameters to kind of map the scoring. Now, if you can use AI and increase more parameters to detect a fraud, it can actually improve the efficiencies there as well. So I think there's definitely a big business case and a need, and that's becoming a part of the overall model as banks are evolving and leveraging real-time decisioning to kind of help client experience as well as make their reduce the losses on the cost side.
Shifting topics a little bit and shifting over to platform or modernization within the systems. A lot of the core systems right now need to be shifted off of the mainframe, modernized, or it may not even be off. May just be more of a legacy system that is not really set up. A whole bunch of different challenges. So maybe, Girish, maybe you could talk about that one a little bit with what you're seeing and just get your general thoughts on that.
Definitely, Robert. So just to give a background, so I've been leading transformation programs in my current organization for the last 7 years. I've been involved with syndicate loans platforms, building it ground up from legacy systems, taking it to the cloud. And it's not just about modernization of the infrastructure. It's the transformation programs typically start with having a strong business outcome. Business has to fund that and have a clear understanding of what the outcome is going to be in terms of operational efficiency, in terms of making it more competitive in the market and adding more revenue. So those are the KPIs which need to be clearly defined when we are initiating a transformation program. So again, when we have these business outcomes clearly defined, then it has to be a phased approach. We cannot talk with financial institutions. The previous speakers talked about the regulatory and compliance aspect of it. So keeping all of that in mind, we need to have an initial 90-day phase where we build, design, and incorporate bring in all the stakeholders who are going to be impacted by this transformation program. So it has to be a phased approach where you break it down into milestones. It's typically, these large-scale modernization programs are multi-year, right? So, but business has to see something out of the door, like an MVP, like a product out, to do some show and tell sessions to see what's being built and how the progress is being made. So that phased approach is where we can quantify success. We can say, okay, we are making, hitting milestones, making progress in the right direction, and can evaluate the journey of the modernization or transformation program. Again, important players here are if there are any external dependencies, we have to align those roadmaps as well with the transformation program here. Robert.
Any other comments from the panel?
Yeah, I think I'm going to go back to the decision intelligence framework. You're going to get really annoyed with me on this. Is what decision are you trying to make? What are you modernizing? If it's a full stack, like the whole thing, or is it, I think, as Girish mentioned, you're doing it in phases. The thing of it is that it should not be done in isolation. The moment it's done in isolation, most of the times it will fail. So I'm going to give you another nugget in terms of the decision intelligence framework, in terms of how to go about it. Data is your number one enemy and your number one friend. So again, a 2x2 matrix, simple. Think of complexity on the x-axis, and then think about your data, the structure, the data source, and then your data regulatory sensitivity. Okay, so, and then score it. Highly regulated would be 5, and if let's say let's start with the data source. If your data source is easy, not many, it's structured, there's no text, there's no voice, great, start modernizing with that, right? But make sure that you have the, if the data source is like you go through too many hops, too many servers, you have data on Teradata, then you have some in the lakehouse, you have some on GCP, you have on the data lake, it can go on and on. The most of it is polluted. So how do you reduce that data pollution using this 2x3 matrix? And then I think, again, the third area is the highly sensitive information, like UAR, SAR, PII, and so forth. If you try to modernize the platform to take those kind of data in, i.e. take it onto the cloud to get more gravity for the sake of having gravity, it will probably fail. So start small, again, as Girish mentioned, and do it in phases, do it cautiously, with compliance first. Again, I say this, governance first, and outcome with the decision along with it.
I can just add a couple more things. So first thing, I'll just admit that I'm an engineer, and a lot of people in technology are engineering, by education. And engineers love to build. They love to build solutions. And engineers build solutions and sometimes find a problem that the solution can, really map to. So it's the other way around. You build a solution and see what problem. And that's been the case. But I think now, with the way AI is also evolving and the way technology is evolving, a lot of us are reimagining our business itself. So it's starting from reimagining your business and find the right components that can solve the problem. So I think that mindset change is happening. You have to really think of the problem first, reimagine it, and work very closely across the function, across the ecosystem. It's not a technology problem. It's not an operations problem. It's a tech, op, and business problem where you're coming together and reimagining a function, a process, or the bank, and building, it for that. And that's where I think the key thing comes is you kind of create a modernization roadmap. And of course, it can be a long journey, but given the way industry has evolved, it can be made into many smaller steps that can be measured and can be evaluated as you go on that journey. So we have actually moved away from calling MVPs because MVPs are fine, you can do that, but we actually call it no regrets. So you kind of create a roadmap of where you want to go from a North Star perspective, and then find areas that you anyway have to do, which will be required to kind of get into the the new space, and you build on that. So you don't throw away. It's not a throwaway project. It's you build stack by stack. You have no regrets that you identify and you build it. And I think that's breaking it down and using new technology. It can be done at a much faster and a lot, I would say, with less risk-averse model.
Coming from the front side of the banking and trying to interpret what they're doing on the back side and relay it to our cross-functional partners. So that's typically what I'm doing on my end, is understanding from the operational side, and we are seeing it from both as we start to implement most of these into most of our sources, into the services. We're looking at it from the risk perspective. Risk is probably paramount to what we're doing in the banking. Is with any of these software, the AI integration, we have to look at it from a risk perspective, then move on to the credit, and then I think third is looking at it from just the agentic on the front end for the sales and marketing piece. But it really does come down to how we implement it from a risk and governance perspective. That's as much as I can add. They're really well spoken when it comes to the tech piece of it, and it's being able to translate that to our front end people and understand how they can be involved in it, but at the same time look at what the risk is.
Staying on the risk topic there too as well with modernization, what do you see as in the banking sector the biggest risk about modernizing and moving in AI implementation?
So modernizing and AI implementation definitely is a big sector there. I think a lot of the banks have core which has been a legacy core. It's been there for years, and nobody has dared to touch it because you don't want to touch a core and like get into issues. But I think now with AI, you can explain and understand the code, the legacy core also much better without really, even if the SME is not around. So I think the openness to look at the core and see how you can reimagine your core also is very high from banking, from what we see. Again, a lot of the big banks have done this in the past. They've modernized it. They've created APIs in the past. But the regional banks, the mid-sized banks have dared to stay away from it because it's a big, long roadmap for them and they don't want to take the risk. But we can see that in the last 18 months, a lot of the smaller banks are also looking at either hollowing the core and modernizing around it, or leveraging some parts of it. So I think because of AI, the risk of modernizing has gone down. The explainability of what is being done has improved, and therefore you don't need 3 years or 5 years to really take that journey. It could be compartmentalized into a much smaller journey and with a higher ability, degree of success and containing the cost. So that's something that is what we are seeing in the market.
Mike, I'd like to shift topics a little bit here too as well to data. And from the front end of everything, for years and years, it's been garbage in, garbage out type of terminology in the data processing industry. How are you seeing AI impact this?
What we're seeing, it's I think a real divergence with going to a hybrid model. When you look at the data that's coming in, we want to obviously vet it, but we're looking at when you're talking to speaking on the legacy, we're seeing the legacy having to be more of a hybrid model with AI. You can't necessarily get rid of any of your legacy systems. We're working with the systems that we currently have, and then looking at how we can create more of a hybrid model. And then obviously we can't talk about time constraints. We don't know what those look like. Everything is not so much, you're not trying to predict, but really just prepare. I think that's really the direction that we're seeing from, all of the product partners, everyone, partners like Ramin. The only way to really advance the bank and the data that's coming in is you have to take. I know it's that black box versus glass box look. You have to be able to. You got to break it, but know which aspects of the data coming in you can break and which have to be compliant. It's just. I think that's always going to be the I guess the aspect that we look at from banking. I don't know what.
Yeah, I think I can add to that a little bit. Look, data is difficult to find, understand, use, manage, and govern. It's a fact. That's a common theme you get in banking. The very last piece, to govern, needs to come first. So the trend, I think to answer your question, I see in banking generally is that if you have tier 1, tier 2 use cases, meaning by tier 1, tier 2, I mean those use cases that require heavy regulatory scrutiny, then you're going to need a bunch of things before you can get into any trouble. Number one, you have to, how many of you are on Ancestry.com here? Ever use Ancestry.com? No, well, like a couple of people. Okay, so it's like, who's your cousin? Who could be a similar DNA to you? So that's the lineage. It's the data lineage. You've got to get that right. Otherwise, you cannot take that use case into production. So data quality check and business metadata management. So those are the three areas that AI can certainly help, but let's not forget, and I mentioned this before, a lot of these decisions are just agentic. They're not necessarily agentic AI. So you could leverage some of the robotic processes that you do have to get the low-hanging fruits out of the way, but with the thought of governance first. So those are the three areas that I see: business metadata management, enrichment and so forth, because you have to have the metadata. There's several companies that actually do it pretty well, like, for example, Solidatus, in terms of data, the actual discoverability of data. Where is it? Where are my cousins? Like, where are the same people? Like, how can I explain the DNA? So first you find using those agentic models or vendors, or if you need to make stochastic decisions, that is something you can plug into using the APIs, either to the back end of the vendors, or you actually just use some of the LLMs to make this stochastic decision, put the human in the loop, and then go forward so that you have well-governed data, AI ready to go to production.
Ajay?
I mean, I'll just add to that. Typically, like in my space, in lending, we have so many different data silos, like the different lines of businesses are using the same data elements, but in different ways. Right? So that's where, before we run any kind of AI analytics on top of it, the first step is building out a strong data foundation, like having a data lake in place. So that's the drive, like having a data lake in place and clearly defining the data lineage, as Ramin talked about. Like, for example, like loan, it has so many characteristics, like, the way we're getting the loan data is all unstructured data. To have it correctly mapped, stored, understanding the authoritative data sources where these producers and consumers are relaying that data across, and in case if there are any changes to the data elements as it's moving front to back. Because it should not be like we start with origination, like loan origination in front office, book a trade, securitize that trade, send it downstream to market risk, credit risk. That's when it should not be highlighted, oh, the model is breaking because a data element is corrupt or was sent incorrectly. It has to be layered through front to back with a clear data lineage. So that's where the importance of a data lake comes into play.
I think data has always been a problem, and it will always be a problem because there's too much of data flying around, and as we see, data is increasing, by the minute as such. But I think data also is very critical because that is what the models are learning on. So, if it is incorrect data, it is going to be a catastrophe for everybody. So I think that the points that, my co-panelists have told here about how to create the right governance structure, how to create the right, lineage is important. But I think as it comes to decision, we are seeing that, the data is closer to the SME. So if you're looking at a loan data, the business which is running that are the ones, the data is really picked up from that because that's where the data is the closest. So we have to remember that as we go more and more into AI, I think one thing is very clear, execution can be done through an agentic or an AI. So execution, and to scale, you use AI, but when you have to accountability, it has to come to the humans. So it has to be closer to the decision-making body. And I think that's where you kind of create the structure where it's hybrid model, like Ramin, you said, that it has to be hybrid. The model has to be, there has to be central lake which will be there for the bulk of the data which is used for scaling, but the decision-making points for which can be used for the data has to be closer to the source, which is at the SME level.
So if I think about data and data readiness, how do you know when good is good enough for AI?
Go, but I think it's the diff again, right? So it's ADA, Agentic Data Assessment, if you're referring to the Agentic one. Is that what you mean by the?
Yeah.
So yeah. So again, the level of complexity using simple matrices, you can decide how to go about it, and score. If you have like if your data is really fragmented, so that's going to get a score of 5. If your data has UAR, PII, it's going to get a score of 5 from a regulatory perspective, which is not good. You want to have a lower score. The lower the score, the better, and that's where you start your journey. And then if you have too many hops, like from a lineage perspective, so the first was mainframe, then it goes to Teradata, then it goes to the data lake, and now it ends up on GCP. Well, can you really trace that? And if you cannot, you give it a score of 5. If you kind of can, you give it 2 or 3. And then, so each use case, you line up each use case against this matrix to begin with, called ADA, and then you start your journey from there.
Okay. I think you wanted to make a comment on this one.
I mean, when I see the data is coming in, we're looking at it from a perspective of, well, you said it earlier, garbage in, garbage out, but the allotment of what's acceptable and what's not, looking at it from a perspective of where are we going. I mean, I don't think everybody here is a software engineer. I'm just guessing. So talking at high level to get it to a level of what does it mean for front-end banking? What does it mean for ROI? What does it mean for, the future of banking is really looking at, well, where can we take the least amount of risk, but yet still see a higher return on our investment? And it really comes down to the data that's coming in. Can we maybe shift the focus onto our marketing and sales with a clear focus on agentic AI for our front use cases, which is our portfolio managers, our officers, our credit risk at the front end, but our credit risk officers, our credit risk analysts become more of, I guess you could say they're agents, because you would basically be the checks and balances for the AI information as it's coming in. I don't think that eliminating humans in the loop, and I think I don't really like the term human in the loop at all. You're seeing people are afraid that they're going to be displaced. I think there's a dynamic shift in what is going to be your title and focus, where you may not need a credit analyst, might not need, but you will still need a credit underwriter that has an analyst capability to be able to review the AI as it comes through the system. And that's where we see kind of a dynamic shift in focus for, I think, banking in general is that. And I think also speaking to the larger aspect is, how do you take that data and make it useful for all of the bank? And I think it means that we have to go ahead and look at, well, do we want to take all of it? Do we want to take every aspect of data from all banking, or just what we have? And while I think regional banks are using it in a mindset of, we don't want to spend so much money on AI, or what's that dollar look like for us, they, I think, have a much more nimble approach, because they're not as heavily regulated as, say, the top 3, top 4. I don't know. I think that's kind of the direction that most of leadership needs to be looking at is, do we shift away from people, or do we just look at taking our people and maybe putting more of an investment into what their job role is and attaching AI to better serve their needs so that we can serve our customers.
Yeah, you bring up human in the loop and human oversight, so to speak. So I'd just like to kind of roll it down from down the panel to get your input on that.
You want to start? Or?
Yep.
So, okay, if I were to start, I think, of course, human in the loop is the most talked about thing after agentic AI, I guess. But it's not the human in the loop at the end of it. Generally, we need the human in the loop upfront as it is designed, as the process is designed and the governance put is, because that is where the biggest impact is. So it's not at the end, it's actually in the beginning to start with. And I think there are three ways to look at it. One is human in the loop, where decisions have to be made, and there are regulations, there are regulatory requirements that require a human to anyway look at it to control the biases and the decision making. So that's the use case when whether it is a credit lending or something. The AI can help get to a point where human can't take a decision. So that's the human in the loop. There's also human on the loop, which is something which somebody monitors, and it's not really necessarily very actively looking at it, but these are things which are decisions that can be reversed if need to, but the humans are actually looking and making sure that it's done the right way. And then the third one is, of course, autonomous. There are low risk items which can be straight through processed by AI. So I think these three categories, I would say, one is a human in the loop, where there is irreversible decisions to be made and people have to take a decision. Human on the loop, where the decisions can be reversed possibly, and it's a low risk relatively, so you have to just be on top of it. And then last one is something which is standard, straight through, very low risk, you can get through autonomously.
Just to add to that, so I mean, we're talking about like real-time AI decisions. Yes, AI definitely can take decisions, but when we look at the business outcome of that decision, some human has to be accountable for that decision, right? There has to be a person, like a project sponsor, or someone has to be accountable for that decision. So I'll take an example. Let's say when I work closely with front office traders, operations folks. So when a trader books a trade, right, it has to go through with the right amount of explainability and auditability. The trader ID and other details have to be there when an audit is run on top of it. The same thing with operations. There is workflow orchestration which is there, where certain steps can be automated with agentic AI, let's say KYC checks, and to move things faster. But in the end, we still need a maker-checker workflow. Right? We need to make sure that the numbers that are reconciled are being reviewed by somebody on the operations side, and then check the box and send the data to downstream systems. Because this is where, again, auditability comes into play. So human in the loop at this point is very important.
Ron?
So I'm a big fan of design thinking and putting the HCI concepts and so forth, actually putting humans in the center of design. So we certainly need them in the very beginning. And again, using the decision intelligence framework, I do have a methodology by the name of 4D. So you define your outcome. If your outcome is human out of the loop, meaning you actually trust to have an agent on your org chart, work your way back. So human out of the loop, if that's the outcome, then apply the 4D for the real AI decision making. So what's the 4D? So data, obviously as the first, dollar, differentiation, and deployability. If you think you can do the 4D without the humans, then the human is out of the loop, and that's the reality. But that would come out of a design thinking session with empathy mapping in terms of what is, what if, what wow, and can you really wow your customers without the human in the loop? If the outcome is human out of the loop, then go to the left. Outcome first, go to the left, and then define and pave the way for the next steps.
We're about out of time, but I'd like to get any quick comments from the panel that you might have on anything in general on AI in the bank of the future. 30, 40 seconds maybe, so they don't yell at me too much. Okay, so start down here.
Oh, sorry, all right. I mean, we've talked about it. I think it really comes down for leadership, and if you're thinking about it, what is the future of banking? It's just adaptability and accountability. I think that's probably paramount to where we're going.
Yeah, I think I said it earlier that anything that is execution and that can be done repeatedly, I think that's where AI comes into picture, but accountability still rests with an individual. That's something we have to always remember.
Yeah, no, from a transformation standpoint, again, just to reiterate, things are moving really fast with the new tools coming in, AI tools coming in. Productivity has improved tremendously on the engineering side, as well as the business expectations have gone up hugely. Projects that used to take a year and a half to, and now they're expected to be done in like 6 months. So, I mean, there are certain things, obviously, we have to be realistic with external dependencies as well. But yeah, this is constantly evolving and evolving fast.
Yeah, and I think for me is moving from building AI capabilities for the sake of building AI capabilities into decision-grade capabilities. So you move from something that is just technology into something that really makes decisions for me, and that then you use AI if you have to in the middle. So that's, for me, will that be future-proof? Would that be the future of banking? I don't know, but certainly not future-proof because things change so quickly. Yep. And yeah, so just make sure you don't have decision impossible, rather you have decisions possible.
Well, I know we're at time. I'd like to thank the panel for the great conversation, and hope you enjoy the rest of the event.
Thank you.
Thank you.
Thank you.